Companies can raise capital by issuing shares. This is normal practice. This is specifically true for companies who have seen an increase in net profits and probably need additional funds for new project. It may issue shares at a price which is higher than its nominal or par value. Okay, but wait a minute. What exactly is the nominal or par value of a share? Think of it this way. The nominal value is just an arbitrary value assigned for balance sheet purposes. Let's say a company wishes to issue 1,000 shares at $1.50 and the nominal value is $1. Well, the company will receive $1,500. 1,000 shares multiplied by $1.50. Share capital increases by $1,000, the nominal value. The difference is accounted for as share premium of $500. Okay, for accounting enthusiasts, how is this recorded? The entries will be debit bank 1,500, credit share capital 1,000, credit share premium 500. My name is Shaktee Ramtohul. Hit the like and subscribe button for more videos on accounting and finance.